Welcome to how to take advantage of this volatile stock market. If you're not being paying attention to the stock market, then you probably already, have missed out on certain things. But if you've been paying attention, then you might be wondering what's going on in the US stock market. So I'm not going to go over the reasons what's going on because that's not important. What's important is to make money in the stock market, right? And having said that, um, sorry about the sloppy presentation because I just wanted to get this video out. I want you to make money from this video rather than spending time on making this video fancy. I wanted to get it out sooner to you. Also, I'm not a financial advisor, so this information is for education and entertainment purpose only. So talk to your financial advisor, and he probably won't know any of these things. But anyway, so let's come to this. So basically, let me just quickly show you what's going on in the U.S. stock market. So U.S. stock market, basically S&P 500, and it is very close to this. You see this? 200-day moving average, the right line over here. It did go through it yesterday. Now it is there. Um, a lot of people are thinking these are scary times. And let me show you, there is an index that finds out if it is a scary time or not. Look at this. So right now the market is in extreme fear. And as Warren Buffett said, be fearful when people are greedy. And so means if it was here, then you should be lightening up on whatever you had and be greedy when others are fearful. So the market is in extreme greed or extreme fear, sorry, phase. So you want to, but you want to be strategic because you don't want to be stuck in it. And also right now, if you look at and again, this is all about US stock market, not an expert on India, China, or, you know, European stock market, just related to US stock market. But this information could be used there too. So anyway, so coming back to this, stock market has dropped quite a bit. You see, 1, 2, 3 days, it has been dropping quite a bit. But as I mentioned, we are in the first stages of the drop off. So don't be too greedy because it is quite possible that from here, the market could go up, make new highs, or it could go down big time, like 30, 40, 50% crash. So how do you make money in this situation? So let me show you what we could do is, indices. Indices are the US stock market indices, which is the S&P 500, NASDAQ, Dow, and Russell 2000. Those are the main ones that I'm focusing on. And these are the 3x leverage ETFs, which is so if S&P 500 goes up by $1, UPRO will go up by $3. Okay. So TQQ is for NASDAQ, UDOW, Dow, URTY, Russell. So same thing. So these will go up by 3 times if the underlying indices go up. Okay. At the same time, they would go down if if S&P was going to go down 1 point, UPRO would go down 3 points. Okay. And these are the inverse ones. So that means if S&P goes up 1 point, SPXU will go down 3 points. Okay, because these are the inverse ones. So similarly, SQQ is for NASDAQ, Dow, SDOW, and SRTY is for Russell. Okay. So what you could do is you could buy these, okay, but don't be too greedy, just buy 100 shares. And also try to dollar cost average. What do I mean by that is if you are buying UPRO over here, you can see over here, UPRO is close to about $65, okay? And as you can see, this is far below, yeah, or far above where the bottom is. So that's why I'm saying don't be too greedy. And we're looking for a quick 5%, no more than that, because it's very likely it could go up and then go down. Okay, so quick 5%. So similarly, you could do TQQ, UDOW. Okay, it's taking some time to load up, but that's okay. And just going quickly back to this, so where would you buy? Okay. So look at this right now. It is at 65. So I would not buy if it hits 70. Okay. So buy it between 60 and 66, 67. We're looking for a quick 5%. So $3.5 there. So do not buy above 67, just buy it below that. Similarly for TQQ, you could also see right now it is at 53. So yeah, you could buy it no more than 55. Okay. So similarly, you can see UDOW, it's 75. I wouldn't go beyond 77. So buy below 77. Okay. And if it starts going below too much, um, then then I'll tell you another strategy for that. Okay. And let me show you. This is the URTY. So URTY again, don't buy above 42. Okay. So just stick to that. So, I've given you all these various options to buy these. So how would you do it? Would you buy 100 of each and then, try to make 5% quick profit on it? How should you do it? Okay, now this is me. This is me personally. What I would do is I would buy UPRO. Okay, I wouldn't buy any of the other ones. Why? Because S&P 500 is actually one of the most stable ones because it doesn't go down up too much. Nasdaq does that quite a bit. Russell is crazy because it's small companies. Most of those are zombie companies, meaning they aren't making any money. So it can drop quite a bit. Dow doesn't move that much, but again, it's 30 companies only. So TQQ, you could make a lot more money in a short amount of time. But again, it's very crazy because these are all the AI companies. So remember back in 2000, NASDAQ crashed 80%. So we don't want to be in that. So what I would do is I would just pick one, which is UPRO, buy it at here, which is, UPRO. Let's go back. It was at 65 something. Okay. So I would buy it at, right here, 65, whatever it is, 65. Don't, not going to buy about 67. Just buy it over there. And then, depending on how much money you have, the next one you're going to buy would be at 60, another one 55, 50, so on and so forth. You don't want to have a stop loss in this kind of situation. Why? Because the market is going to go crazy. It can quickly take out your stop and then it will go up. So don't do that. So pick one, like I picked UPRO, 65, you buy 60, 55, so on and so forth, depending upon how much money you have. Okay. You have a lot of money, then you buy it at 65, 64, 63, okay, all the way up to zero. Make sure you have enough money to cover that. Okay. All right. So that was the first thing. That how would you do the second one, which is the short? So here also you have the opportunity to do any of these things. SPXU is S&P 500. This is NASDAQ, Dow, SRTY. So again, I would pick only SPXU. And also when the market goes crazy, SPXU has a tendency to go 5 times. Now, if you put SQQ, it could go up 10 times because see, NASDAQ dropped 80%. So if you go back over there, SQQ did not exist, but I have done the calculation. If it did exist, what would it do? So it would go up by close to like 8.5x, something like that. But just to be safe, you can say 10x. It could do that. And the worst part is not that. The worst part is it could take a long time for it to come back also, okay, because it would stay down. See, for this, when you're shorting it, you want the market to go down, then go back up. So again, SPXU is a good bet. So what I would do is go over here, SPXU, it's gonna come up. Oh, by the way, I'm using all free charts. So if you go to finance.yahoo.com, and don't worry about the indicators that I put on this. So finance.yahoo.com, free, all the charts, whatever you want. Then the other website is, this is, barchart.com. Again, the charts are free. The FinWiz is also, everything is free over here. See, I'm recording it right now live during the market time, and it's 3:42. So instead of trading in the market, I'm telling you these things. Actually, I already put my position. So whatever I'm telling you, I've actually already done those things. Okay. Um, all right. So speaking of already that, I already made money in some of these, the trades that I had put on, especially cold. I'll come to that in a second. Anyway, so as I mentioned, let's go back to SPXU. SPXU is at 33, okay, right now. So will it be able to go 5 times from this? No, actually 5 times from the low point. At the low point, it was 25.91. So let's just say 26. So just for the sake of calculation, 5 times 25 is 125. So you want to keep shorting it in such a way that you have enough money to for the market to go up to 125. Okay. So you could short right now, it is at 33. So go ahead, short it right at this level. I mean, I wouldn't, I mean, you keep shorting this. Don't worry about this, even if it drops to 10, whatever point you drop it, to be on the safe side, make sure you have enough money to go 5 times that. So I had said 25 times 5 is 125, but to be on even safer side, what if S&P dropped more than 50%, 60, 70%? I'm not expecting that, but still. So 5 times 33. So let's just make it 165. Okay. So make sure you have enough money to last that. What do I mean by that? So you want to make sure that if you were to short it right now, 33, so that is 3,300, that's what you would need. And then the next short, depending upon how much money you have, could be at 38, 43 every 5 points, or it could be at every 10 points. So make sure you divide the money that you have by how many you would need. And also make it, this is actually a good trade, UPRO and SPXUY, because both of these are going to move in opposite direction. Okay. When UPRO is going up, SPXU is actually going to go down. Okay. So whatever money you have, you divide it into two parts. So leave, let's say you had 100,000, leave 50,000 for UPRO, leave 50,000 for SPXU. Why? Because as UPRO is going down, SPXU is going up. So you will need money to buy the UPRO shares, and you'll need money to short the SPXU shares. So you had 100,000, I would actually play with 80,000. This, so 40,000 for UPRO, 40,000 for SPXU. Okay, that's one trade. Okay, let's get back. And the other trades are for commodities. Boil is natural gas. It's 3 times natural gas. Um, and it is doing pretty good, meaning it is natural gas is beaten down quite a bit. Let me show you that. As it is loading up. Yeah. So now it has started going up. It was beaten down quite a bit. So it is going up, as you can see. So Boyle is still good, but again, a quick 5%, 10% on this. Don't put too much money on it. And similarly, so let me show you that trade quickly. So Boyle, where's Boyle? Okay, Boyle is over here. It's loading right now. Okay. So Boyle is right over here. So you could buy it right over here for a quick, and I'm gonna let it go. Like I have lots of shares of Boyle, and I'm gonna get them out from starting from 970 to 11. Not too greedy. Don't want to go beyond that. But if you are getting in right now, $9 something, and you can let it go at 950, 975, 10. Don't go beyond that. So 11 is max. I'm actually, most of my stocks I'd be out by 970, 75. Okay. So that's how you would play Boyle. Like you would go long here and then go this way. Cold is the opposite, the inverse of Boyle. So when natural gas goes up, cold goes down. Okay. Cold, they just have these crazy names for, so this is the short one. So as you can see, this is going down. Okay. So you could short it now because it's still at the top. Okay, so that's one way you could do it. Now, as I said, I would focus more on this, and I will also show you in oil. The oil is also beaten down quite a bit. The reason for that was the dollar went. I mean, like the economy is going down, S&P going down. So the mind frame of the traders is if economy goes down, people are not going to spend as much money on oil. But there are other reasons, which is the dollar is going down, which means oil should go up. But since the economy, stock market is going down, everything is going down with that. But what you could do is you could short oil D. I've also done that, and then buy it back. Um, I have lots of trade put on, so don't go by what I'm saying. And towards the end, I will give you one sure shot trade if you're either if you don't have too much money or if you don't want to take too much risk. I will tell you a sure shot trade in a bit. Right now, I'm just going through what I'm doing. Okay. So as you can see, this is where we are right now in oil D because oil had gone down quite a bit uh, here. And it may seem like I'm repeating a bit because I want to make sure that you understand this. And if you don't, just Google whatever terms like UPRO, Google it, you will get answers for that. And also, you feel free to watch it again and again. As you can see, oil has gone down so much. Now it is going to go up, you know. And again, trying to make quick 5%, no more than that. Okay. All right, so that's it for this. And then volatility ones, the SVIX. Okay. So if you have, as I said, if you have limited amount of money, I would go with SVIX. That's it. Just buy SVIX. Why I'm showing you that is, okay, by the way, all these charts are free, not paying for any of these charts. Okay. As you can see, let's do this. There was a huge spike in volatility, as you can see. Look, 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 look. Yeah, it is exciting for me. May not be for many people. Okay, look at this. See how high it went? It went up to 65.73, 65.73. See, the only other time was COVID time. It had gone up this much. I mean, more than that. But and then around 2008, the financial crisis. Okay, so as you can see, this is so rare. We're going back to 1990. You don't see that. And what happens when it goes up like that? It actually comes down rather fast. See, even if it went to 65, it is actually already back down to 32. So it has already gone down half. Actually, a lot of that happened yesterday itself. Let me show you. Yes, see, it went up, boom, then it came down. Okay. So how do you play this? So what do you do? What you do is I have given you several options over here. One is to go, I'll come to this because this is the best option. I'll come to this in a second. Let's make this, give it a fancy color, right? Because this is the best one. The best, and I'll tell you why, because you don't have to worry about, I mean, and you can make money in short amount of time. All right. So the other thing that you could do is you can short UVIX, which is like as VIX is the volatility, it measures the fear sort of in layman's term, or how volatile the market would be. It measures that and it actually follows VIX. So if VIX is going up, UVIX will go up. So you want to short that. You don't want to go long that. By the way, long meaning you're buying the shares and short meaning you're selling the shares. Okay. Um, but you may not be able to find shares to short. That's what I've noticed. And plus, you could actually do this using options, but option the premium is so much. And again, you have to be right about the timing. With the leverage ETFs, you don't have to worry about the timings as well. Okay. So, and I'm going to mark this also because this is a pretty good one as well. Okay, so let's go back to SVIX. So what you're going to do with SVIX is, see, right now it is at 20. Look, when just a few short days ago, or almost like 2 weeks ago, it was at 51, and right now it is at 20. Okay, but don't be too greedy. Okay, we just want to buy it at 20 and sell it at 25 or 30. And how would I play this? So 20, if you had $100,000, just divided up by that, 20, 18, 16, 14, that's how you start buying it. And then you start selling it for 5%, 10%, quick 5, 10%. You don't want more than that. You don't want to be too greedy. What if, there is a war between, well, Israel and Iran? Iran sends a nuclear missile into Israel or the other way around, whatever happens, we want to be protected. So these are quick trades. Okay. Don't be too greedy. But if you were to do what I said, like, allocate little by little, so you can give a little breathing room to the trade. Okay. So if you have limited money or you don't want to do too many crazy things, just do SVIX. And the other is selling for the bond, selling puts on TMF. What is a TMF? TMF is actually inverse of TLT. TLT is like the bond index. Okay, the 20 plus year treasury bond. This is the ETF for that. You can see it went up quite a bit. And TMF is, 3 times the bond ETF. Okay. So what am I doing over here? See, right now the interest rate in the US is like 5.25, and the interest rates are not going to go up. They are going to go down because the Federal Reserve will be cutting the interest rates. So what does that mean? When interest rates go down, TMF goes up. So there is no chance that TMF is going to go down. But to be safe side, what I would do is I would start selling puts from here, 50. 50, 49, 48, those are the strike prices. And whatever I'm saying, if you don't understand that, just stick to buying SVIX. Okay, just stick to that. All right. But if you do understand, then you understand the strike, strike price. See, my brain is running faster than my mouth. Anyway, so that's what you would do, but I wouldn't short it right at 58, or I wouldn't sell the puts at 58. I would sell it before 50, like 50, 49, 48. Why? Because you still want to give a little bit of room for the TMF to move. Okay. So I understand that this video has gotten a little longer, but I wanted to give you complete understanding of how you can make money in this crazy volatile market. Actually, if you look at how the market works, it takes a long time, like took for the market to go up. Okay. So whatever market went up in 2, 3 years, it can come down in 3, 6 months. Okay. So when the market is going down, you can make money a lot faster than when it is going up, but you have to be very, very careful as well. So be very careful in all of these. As I mentioned, these things could be achieved using options, but right now, since the market is so volatile, the option premiums are going to be high, and you may not be able to get hit also. Plus, you have to be right in terms of the timing. But with leverage ETFs, they don't expire, so you could hold on to them a little longer. Usually, typically, what happens is because the options are priced a certain way, you will most of the time notice that the option reaches your price after the expiration because all the gurus that are sitting there, market makers, they know what's going on and they're going to manipulate the market. And anybody that thinks the market is not manipulated is actually, shouldn't be in the market. Okay. But the thing is, you want to take advantage of the market situation. All right. So finally, to summarize, the best thing to do right now is to do this. If you have limited money or if you don't have as much experience in the stock market, is to go long inverse leverage ETF SVIX. Okay. Let me quickly show you the chart once again of SVIX. And again, I'm repeating this. Don't be too greedy. See, right now it is at 20. It was at 51 something, gone down less than half. So you want to like buy it and sell it 25, 30, no more than that. Okay. So, good luck and hope you make tons of money using this information. And feel free to send me message. You know how to reach me. And all the best for your trading. Hope you make tons of money. Bye.